If you're trying to find an easy and repeatable day trading strategy that happens every single day to make consistent profits, then this video is for you. Because in this video, I'm gonna show you my easy 1-minute scalping strategy that I use every single day to make a lot of money. It is simple, repeatable, and it doesn't require a bias. This exact strategy now makes me $1,000 or $3,000 a day while only dedicating 30 to 60 minutes a day. And I'm going to reveal everything to you in just 3 simple steps. So with that being said, let's get into the video. So before we actually get into the steps of this video, I want to show you what we're gonna be focusing on in this video. So essentially, we're gonna mainly focus on 2 things. That's why this strategy is so simple. I'm trying to keep it as simple as possible, and most of the time, the most simple strategies make the most money. Okay, this is a strategy that turned me profitable. So if you want this video to help you, put this on full screen, get out from the comment section, just focus on this video and watch this video till the end. This strategy turned me and my students profitable. So now it is time for me to turn you profitable. So first of all, we're gonna mark out 50-minute highs and lows. If you don't know what they are, they're essentially areas that have liquidity. I'm gonna teach you very soon how to spot them, etc., what it is. But you may wonder, wasn't this a 1-minute scalping strategy? Well, it is. But first of all, obviously, we need to understand what areas could switch the market trend. And then after we have marked these out, then we're gonna just focus on the 1-minute chart. We're gonna be focusing the market trend. Market trend is essentially the lifeblood of the market. It is how these markets move, okay, constantly. We never want to go against the trend. The market trends continue to move in trend until there's a market structure shift that could happen from these 50-minute highs and lows that have liquidity, because these big banks, institutions, and hedge funds, they want to take out liquidity to fill their large positions, and after that they can switch the market trend. So let's move on to the steps. Step number 1, spot liquidity. So like I told you, you can spot liquidity by knowing what are highs and lows, and you need to know how to spot them. And essentially, quick little explanation of liquidity. Big banks, institutions, hedge funds, smart money, right? The people who actually move the market, they who have millions and billions of dollars capital to move the market, they can fill their large positions by taking out stop losses of retail traders, because most retail traders fail because they do not know this. So they fail and get liquidated by this smart money. They essentially hunt stop losses of liquidity, and then they can switch the price direction. I'm gonna give you an example right here. Liquidity, look what happens. This gets swept and people got stopped out. Trend was up, switches the trend to the downside. As you can see, that is just a quick little explanation of liquidity sweep and people getting stopped out, but I'm gonna show you how you can actually spot it in the markets, because this doesn't tell you a whole lot. But essentially, like I told you, big banks, institutions, all they want to do is hunt liquidity, take retail traders out from the market, and then they can switch the market trend. Okay, now the way you actually spot these liquidities is by going into the 50-minute time frame and up. Okay, 50-minute time frame and up is because higher time frames has more power and influence, okay, and there will be more resting liquidity. So above highs and below lows, there will be resting liquidity, right? And the way you spot these highs and lows is very simple. A high is always made by 2 candles, and a low is always made by 2 candles as well that are together. Okay, a high is being created by an up candle, right? Up candle, green candle, that is then followed immediately by a down candle. And I know what this may look like a pattern, but it's like that. Okay, this is where the high is. Okay, this is high, and this has liquidity resting. Okay, and once these liquidities get swept, they can switch the price direction, right? And a low is being created by 2 candles. First of all, there's the down candle that is then followed by an up candle, right? Like this, simple, effective, and it's very easy to spot. Okay, down candle followed by an up candle. Here will be resting low. Okay, so resting liquidity. This is a low like this, and this is a high, right? Resting buy side liquidity and resting sell side liquidity. And like I told you, you have to go to the 15-minute time frame and up. Okay, 15-minute time frame and up, that's when these liquidities will have power, more power and influence. Okay, and if you trade forex, works efficiently there too, in crypto, everywhere. Okay, liquidity is needed in these markets and they work everywhere. This strategy that I teach is universal. It works in every single market, right? Whether you trade crypto, forex, stocks, indices, whatever, works efficiently everywhere. Even futures works efficiently. Now, let's spot these highs and lows. So let's go to the 15-minute time frame. What I want to do personally is to obviously mark these 15-minute highs and lows, and once they get swept, we can essentially just wait to see if they want to give us some sort of reaction, if they want to switch a trend. Here's a perfect example. Look at this. What is this right here? This is a down candle that is then immediately followed by an up candle. Now you may wonder which one is the low. Well, we have to remember, since a high and a low takes 2 candles to form, you're gonna choose the more prominent and influential one. So this is down candle followed by an up candle. This is the low, so you're gonna choose below the more lower one. So it's below this up candle. I know, seems weird, but it's like that. Okay, takes 2 candles, you're gonna choose the more prominent one. As you see, got swept, switches that price direction. It got swept quickly. A lot of retail traders got sucked out from the market. They're sad. Smart money is happy, and we're also happy because now we can follow the trend and follow the footprints of these markets. And here's also an example. This is a, look at this, this is an up candle. Look at this, up candle followed by a down candle, right? What is this? It's a high, so I'm gonna mark this out, high. And as you see, it got swept, switches the price direction momentarily. And look at this again. What do we create? A down candle followed by an up candle. Boom. This is a low, got swept, boom, switches the price direction. And as you see, it doesn't always react. As you can see, we create a high right here. This is an up candle followed by a down candle. You're gonna choose the more prominent one. This is the high. It doesn't always react. This is the thing. You have to see the market structure shift that will teach you very soon. But essentially, if it closes like this, this is something called a break of structure. I'm going to teach you now what it is. But as you can see, this barely got swept. Yeah, this got swept barely, and it switches the price direction, essentially like that. But essentially, this is also a high. This is a up candle followed by down candle. This is also, there's resting liquidity. And then what we want to do is mark this out. Now we have to understand, these still have power, these liquidities, but these ones who already got tapped into, they do not have the power and influence. Oh yeah, this guy also got swept. Look at this, I didn't even notice. Got swept, boom, switch the direction. And now after they get swept, you can just remove it, and these still have power because this hasn't got swept yet. So this is a high because it's a up candle followed by a down candle. Now let's actually move into the step number 2, trends, market trends. So essentially, we have to understand the lifeblood of the market. Trends, the way these markets move is repetitive. They move like a wave, and we want to follow and ride the wave. We never want to go against the wave, the trend, because that's like going against a tsunami. Okay, so essentially, the markets move in 3 kinds of ways, which only 2 we want to see. There's the uptrend, downtrend. Those are the things, those are the trends that we want to be focusing on. And then there's the consolidation, which is sideways movement like this. It's when there's no volume, or there's equal amount of buyers and sellers that are pushing the price in both ways, which means there's not much money to be made, but that creates liquidity also, that kind of movement. So that happens for a reason. We have to understand that whatever happens in this market, they happen for a reason. Okay, they are big players, they're big players who are moving the market. They know what they're doing, so we have to just act accordingly. We have to follow what they do, and with this strategy you can know what they do. So market structure, aka market trends. There's the uptrend, moves like this always. There's the higher highs, higher lows, higher highs, higher lows, higher highs. As you can see, it moves in a trend, looks like a wave. Okay, we have to ride this wave. In an uptrend, we want to be looking for buys. Okay, and we just have to look for buys because the market will continue and continue until there's the liquidity sweep. And obviously, if it gives us the market structure shift after liquidity, then we can short the markets. But I'm going to teach you how you can spot the market structure shift very soon. But essentially, in this case, if we see this kind of movement constantly, we have to look for buys. Okay, and the way you can see if it's an uptrend, if we see constant respect of it, meaning it just constantly respects this kind of cycle, it kind of just retraces a little bit and then moves up a lot, retraces a little bit, up a lot. That's how you see the respect, and that's when you look for buys. Okay, then there's the downtrend. It moves in low lows, lower highs, low lows, lower highs, low lows, low highs, low lows, low highs, low lows. Again, if you see this respect, you see this constant movement, this wave kind of movement, you see this big move, small move, big move, small move, big move, small move. That's when you need to look for sells. And you can get ready by marking out them liquidity areas in the 15, them highs and lows. When they get swept, in this case lows, if it gives us the reaction that I will teach you very soon, then you can buy the markets. But I'm going to teach you the market structure shift very soon. But first we have to understand some major things, and I'm going to teach you the markets how you can actually follow the trend accordingly. And uptrend, higher highs, higher lows, higher highs, higher lows, higher highs. This right here, this big move of the trend is called an impulse, okay? Impulse, and the smaller move is called a retracement. Impulse, retracement, impulse. The market has to fix itself, move a little bit down, and then continue the trend. This is what we want to see, okay? And when a retracement happens, something called a higher high will appear, okay? Higher high, and then there's a higher low, right? Impulse, retracement, you're gonna spot this high, okay? And this is in the lower time frame. These are also highs and lows, remember, but these do not have the liquidity that much because it's the lower time frame, right? This is when we follow the trend. So this is a high, right? High like this, right? But what we want to see is an up candle close above that high. That's when something called a breakout structure, BOS, happens, right? And when we're following the trend, we want to break above that. We want to create this breakout structure, and then we can buy right here when the new higher high is being created, and we'll put the stop loss below the most recent higher low. And when after the breakout structure, okay, the candle has to close, the body of the candle has to close above the most recent high, right? Like this in the higher high, to create the new higher high. And then you can just buy here, follow this trend. And same thing here, we create this high after we create the retracement, because essentially how do these highs and lows are being created? When there's an up candle followed by a down candle. So this is a 1 minute high like this. So this is a high, and then once the body of the up candle closes above that, that's when there's a break of structure to the upside. So when you want to buy right here on the money when the candle closes, and then you're gonna put the stop loss below the most recent higher low like this, and you're gonna follow the trend. And naturally, if it's a strong uptrend, it will move like this, right? Moves in higher highs, higher lows, higher highs, higher lows, right? And then there's the downtrend. Okay, same thing. When it moves in, when it creates the impulse, retracement, impulse, retracement, impulse. Remember, low lows, low highs, low lows, low highs, low lows. Impulse, retracement, impulse, retracement, impulse. You know, big move, small move, big move, small move, big move. When there's the retracement, that's when the low appears. Remember, how do the low appears? Down candle followed by an up candle. Same thing in this time frame as well. Same thing in the trends as well. Essentially, here is liquidity, right? Because it's a low, right? But not in ways that these 50-minute and higher time frame have. So once this low gets breaking below by a down candle, body of the down candle, once it closes below this, remember what appears? Breakout structure. And naturally, we want to be shorting right here when this breakout structure happens. Put the stop loss above the most recent lower high, or potentially, if you want to get a better risk-reward ratio, you could wait for the price to retrace, create the lower high, and then you could potentially enter right here. But I like to trade like this, that I enter on the breakout structure. But if I want to get a better risk-reward ratio, you can enter right here when it reaches a bit, because it naturally does that in the trend. And then you can put the stop loss below the most recent lower high right here, okay? And then you could enter. And same thing, what happens? This is a low low, higher low, and then this low appears. You're gonna wait for the body of the new down candle close below the most recent low low, and then you're gonna see the breakout structure. You could potentially, you could enter right here, follow the downtrend, and stop loss below the most recent lower high like this. And if you want to get a better risk-reward ratio, you can wait for the price to naturally reaches a little bit, and you can enter right here on the money and follow the downtrend. Okay, now let me show you in the charts how you can actually follow this trend. So in this case, let's go to the 1 minute time frame, for instance. Okay, this is a perfect example. So if I'm right here, for instance, what do we create right here? Let's go a little bit more back. What do we see? We have this low high, low high, low high, right? The thing we want to see is the respect. Okay, when we see constant respect of the downtrend, that's when we want to essentially follow the trend, right? So okay, here is a breakout structure right here. Why? Because this is a down candle followed by an up candle. This is a low, right? And this body of the candle closes below that. So essentially, this is a breakout structure like this. But obviously look at this, reshort ratio would be shit because I would put the stop loss below the most recent higher low, which is this up candle. I would have put the stop loss right here, but this is kind of, you know, kind of huge, not huge stop loss, but it's can be better reshort ratio. So in this case, we can wait for maybe a retracement and enter on there, or we can wait for a retracement and another breakout structure and enter on the breakout structure. So let me show you how that happened. We're gonna see a retracement. Okay, it doesn't happen yet, as you can see, continues down. Okay, this is a retracement because this is an up candle. So this is a down candle followed by an up candle. There's a retracement as well. We're gonna put the stop. We're gonna put this below the low. And if we see a down candle body of the down candle close below that, that's going to be a breakout structure and we can enter on the money, right? Let's see that does that happen. Okay, it doesn't happen because this is a wick of the candle, not a body closing below that, so cannot trade on that, right? Okay, we create a new low, so we're going to put the stop, we're going to put this line below the most recent low because this is a down candle followed by an up candle, so this is a low. This is a retracement. Remember, impulse retracements. Want to see the body of the candle close now. Now we could enter right here. We could enter right here on the money. Put the stop loss above this this lower high. Remember, lower high. So we're gonna put the stop loss, and we can target those liquidity areas. Remember, 50-minute liquidity areas. So there's some look. Okay, this is actually taken out. We can target this low. This is a down candle. Look at this. If we look closely, this is a 50-minute time frame. Down candle followed by an up candle. We could potentially target that. Now this is like, oh, pretty huge trade, to be honest. We'll see what happens. 1.4 reshort ratio. Let's see what happens. Oh, beautiful. This is actually a pretty perfect example. Look at this. Look at this. Cannot make this up. And how we do this? Following the trend, targeting 50-minute and up liquidity, right? We saw the 50-minute low, we targeted that. That's how you follow the trend. Remember, we saw the trend in here, beautiful low lows, low highs, low lows. We saw the constant respect of the trend. That's what we want to see. That's how we know we're gonna follow the trend. If we see the constant low lows, low highs, low lows. And then when we take the trade, we're gonna target those highs and lows in the 50 and up time frames because they have liquidity. So in a downtrend, we're gonna target the 50-minute low. And look at this. This is just amazing. And as soon as this got hit, it kind of reacted a little bit. Sometimes these liquidities will react at least momentarily, but in this case it didn't react that nicely. But still, beautiful as trade. This is how we follow the trend. Remember, low lows, low highs, low lows, low highs. You need to see the respect and then you target liquidity. So I want to give you an example of the uptrend, right? So if I would want to, okay, we see, first of all, we see this nice uptrend, right? We create our higher highs, higher lows, create our higher highs, higher lows, higher highs, higher lows, right? Now this is a 15-minute time frame, but still we have to remember these trends happen in every single time frame. But I personally want to be in the 1 minute time frame when I want to enter, and this is a 50-minute high. This is also a 50-minute high, but obviously we want to look for buys in here because this is a strong uptrend, right? We want to be looking for buys in here. We're gonna also mark out these liquidities to be ready if they want to perhaps switch the trend, but this is also a nice uptrend. Okay, now I'm gonna move to the 1 minute time frame. Now look at this. This may look like a downtrend in the 1 minute time frame, but in the 50-minute time frame we're actually strongly up. So let's see, do we still respect the uptrend? As you can see, we're slowly starting to create the higher highs, higher lows, higher highs, right? Remember, the 50-minute is very bullish. Okay, there we go. Look at this. We broke structure once because this is a high broken above by this candle body. Okay. Oh, we actually start to get close to this liquidity area. Let's see, does that give us any reaction? As you can see, we took out this 50-minute high, but it still respects the uptrend. How do we know? Because we create still this higher highs, higher lows, and higher highs. So I would buy in this case because this is the thing, guys. If these liquidities get hit and it doesn't react in any kind of way, we can still follow the trend. So as you can see, and I'm gonna teach you very soon how can you see the market structure shift after the liquidity, because we need to see something before we enter. But essentially, this is a high, right? And this candle closes above that, and this is a nice uptrend. I would buy right here. This is a 1 minute time frame. I would buy right here and put the stop loss right there, and I would target this liquidity. So I would put the stop loss a little bit like this for the spreads and By the way, a lot of people may have this question. So if obviously in the trend, we want to follow the trend and target liquidity, but if your risk-reward ratio looks like this, like you're not happy with the risk-reward ratio, which means risk-reward ratio is essentially your profit against your risk. So as you can see, this is 1-to-1 about. I would want to get better one. So what I like to do in these kind of scenarios, if I want to target liquidity, I can target whatever risk-reward ratio I want to have, and this liquidity can act as my first take profit and target the rest here. So I will take something out from the trade if this gets hit, and then I just, just to secure some profits, so it's not a loss if it wants to switch the price direction. So okay, so right now I would have taken partial take profit a little bit, just to, if this wants to switch the trend, because that's what liquidity can do. Okay, as you can see, yeah, slowly making its way to the downside, but we'll see, because it was a strong trend in the 50-minute as well, so we'll see. Okay, let me make this a bit bigger. Oh, we're getting close to stop loss. Okay, there we go. Oh, there we go, actually. Nice. This is a 1-to-3 ratio. That was very close to getting stopped out. Now, in this case, let's say if this would have gotten stopped out, I still would have made profit because I took partial take profit. Depends how much I obviously took. Some people like to take at least some partials and maybe move stops to break even. But if I would have taken only partials, I would have still made a lot of money because, we took the actual profit and didn't hit the stop loss. As you can see, this liquidity did have an impact, start to trend down. Could have potentially shorted the markets from here momentarily, take a mini short right here, but as you see, still respects the uptrend. But now I'm gonna teach you how can you actually see the market structure shift. That was a little back testing, but now I'm gonna teach you how can you see the market structure shift. Market structure shift is like this. Let's say you see this high in the 50-minute time frame and up, because it has a lot of liquidity. You see this high like this, and let's say you're currently in an uptrend. We're moving higher highs, higher lows, higher highs, higher lows, higher highs. In this case, you want to look for buys because it moves in uptrend, right? You want to look for buys in here, and you can target this as your take profit, okay, or partial, like I just showed you. Once this gets hit, the thing what we want to see is the reaction. How will it react? If it just taps into the 50-minute liquidity and up, right? Taps into liquidity and just retraces and just continues to go up, we still want to look for buys, okay, because that means there's more liquidity to be taken. Okay, these big banks, they want to take out liquidity, and once they're happy with the liquidity, then they can switch the price direction. But if it continues, it may want to take out more liquidity, so you can continue to look for buys. But if it takes the liquidity, okay, and starts to reverse, breaking structure, down candle, closing below the most recent higher low, like this, aka the low, right? This is the low, and a down candle, body of the down candle closes below the low. That's a breakout structure to the downside. This time frame is officially bearish now, but that's enough. That's not enough for me itself. So let's say this is a 1-minute time frame. In this case, I want to see 2 breakout structures. So this is one breakout structure. I'm gonna quickly type this in, breakout structure, and then you see a retracement of the downtrend and another breakout structure like this, BOS. That's when I would enter. Right here, just like following the downtrend. Remember, how does it go? This is a lower low, put the stop loss above the most recent lower high, and then you can just naturally enter. And if it's a well structured downtrend, it will start to trend like this, and you can hit the take profit. But only you're gonna see the 2 breakout structures, then you're gonna enter only if you have seen the liquidity sweep before that. Okay, if you just see a beautiful uptrend and you see random 2 breakout structures to the downside, that could just be a retracement in the higher time frame, and then we'll continue up. But if you see the liquidity and then you see the breakout structures to the opposite direction, 2 breakout structures in the 1 minute, then you're gonna short the market, then you're gonna sell the markets, in this case if it was an uptrend. So let me show you in the chart real quick. And obviously the same thing, if we're in a downtrend and you see the low getting tapped into, you see 2 breakout structures to the upside after that, like this, then you're just gonna buy the markets. But only if you see the liquidity sweep before that, okay? But essentially, let me show you in the charts. So essentially, if we, okay, this is a beautiful downtrend right here. All right, so I want to give you an example of a nice market structure shift. As you can see, in this case, we want to look for sales because this is a beautiful downtrend. It moves in low lows, low highs, Low lows, low highs, low lows, low. Obviously, we get the point. Low lows, low highs, low lows. We want to look for sells in here. But in this case, we obviously want to be ready if there would be a market structure shift. So I want to mark out these lows. This is a down candle followed by an up candle. This is also a low down candle followed by an up candle, right? And we also have some lows in here because these have liquidity. These are above 15-minute time frame liquidity lows. So we're gonna be ready if they want to get swept. So let's go to the 1-minute time frame. And if these areas get hit, we want to see the two breakout structures to the upside in this case to see the market structure shift. Now, if it doesn't happen, if it just goes through it, we're gonna follow the trend. So let's see what happens. Okay, we actually swept this. Now, as you see, it may look like just a breakout structure. It may look like this candle just closed below it, which it did in this time frame, but in 15 minutes, as you can see, it actually swept it nicely. As you can see, nice reaction. So in this case, I want to see this high getting breaking above. That's what would be the first breakout structure. Oh, perfect. So this is a first breakout structure, BOS. We want to see the second one. Obviously, we want to now see a down candle or some sort of retracement and then break above again, because that's the two breakout structures in the 1 minute. Okay, there we go. We'll create a new high. Now we want to see an up candle close above that. Okay, doesn't happen yet. We'll create a new high because this is an up candle followed by a down candle. So this is the high, most recent. Remember, the most recent that counts. Now we broke structure the second time. Okay, this is a one breakout structure, second breakout structure above. Remember, breakout structure counts when it's the most recent high in this trend. So this broke above that. That's the breakout structure. I will put the stop. I would enter right here. I'll put the stop loss below the most recent down candle, right? So I will enter. I will target. Let's go to the 15-minute time frame. Where could we target? We target these highs. Yeah, let's target this high. Okay, that will give us a pretty decent risk to reward ratio. Let's see what happens. Okay, that's like 1 to 3 risk reward ratio. So if this gets hit, I would 3x my risk and make good money. Okay, a little bit consolidation. Oh, beautiful. Beautiful. As you can see that in the beginning, it kind of consolidated. Remember, the third kind of way the trend can move, sideways movement, maybe a little bit low volume right here, but then we eventually go to the trend. Why? Because we saw the 50-minute and up liquidity low getting swept, and then we see the two breakout structures to the opposite direction, and that's when we confirm the market structure shift, and then we actually make money. That's how I make money every single day. That's how you spot the market structure shift. And also, this is in this case, naturally, when we actually start to respect the trend even more, we could just naturally follow the trend the way I taught you earlier. Key is in these markets is to always to follow the trend. And as you can see, now that we swept these liquidities, we just continue to respect this uptrend, meaning there's more liquidity most likely to be taken. But if we, as you can see, now we took some more liquidity. If we see those two breakout structures to the downside now, this is a down candle followed by an up candle. Let's say low, and okay, we actually broke structure above. This is still respected after, but let's see, does it want to still respect the downtrend after the sweep, because it may happen a little bit later. Let's see. Nope, we want to continue the trend to the upside, as you can see. So this is the thing, perfect example how these liquidities, if they get swept and they don't react, as you can see, reacted momentarily, faked out the market most likely, and then we continue to up. So I would buy right here actually, because we broke structure again. I would buy above this because this is a high, remember, high, and up candle closes above it. I would buy right here, obviously with a little bit lower risk. I would in this case, because you know we just took liquidity, right? But essentially I would buy right here because we continue to respect the trend. That's the thing. If this liquidity doesn't get respected, that just means there's more liquidity to be taken, and you can just follow the original trend. So I would target this 15-minute high. A little bit lower risk in this case because we just took some liquidity, yes. But wow, this is pretty huge trade. This could almost be considered as a sniper entry. Let's see what happens. I would most likely have some sort of partials in the middle of here, because I would have some partials here. Let's see what happens. Nice, bro. This is what I'm saying. And there's a lot of re-entries in here as well if you miss the trade, because it moves in higher highs, higher lows, higher highs, higher lows. That's how you follow the fucking trend. Okay, very simple. But yeah, now I would have taken some partials in here above some lower time frame highs. But yeah, Let's see what happens. Oh, wow, we actually switched a trend. Wow, okay. As you can see, these highs actually had some sort of impact, but I would have taken, wow, that's insane. But I would have taken some partials, so this would have been a 1 to 3.5 reshort ratio for me. Normally, I'm not the biggest fan of partials, but in this case, because we had chisting and liquidity, and also this is like 1.5 reshort ratio, this is almost considered as a sniper entry because it's huge. So I would like to have some partials in the middle, but this would have generated me a lot of money. And also this one as well. This was purely taken off of the switch of the trend, 50-minute lows, 2 regular structures in the 1 minute, and then this is just following the trend. And also here would have been a lot of potential entries as well. And that's my 1 minute scalping strategy that makes me a lot of money. But if you made it this far, comment down below what you thought about this video, like, subscribe, and if you're actually serious, I have a gift for you. Because you made it this far, I have a gift for you. Click the first link in the description. It will take you to my free 1-hour course. It will take you from an absolute beginner to a profitable day trader step by step. Hey man, as usual, I will see you on the other side. Peace out.